This video is sure to trigger some viewers, but the purpose here is not to trigger viewers. It is to prepare for the unexpected. We do not have the 100% guaranteed answers for the right-hand side of this chart. This side of the chart is blank. It's blank on every single chart that we are going to look at and that we will ever look at in the future. Of course, that is in the future of the market. What we do know is what's happened in the past. We know what's happened on the left-hand side of the chart. So as I said in the intro, this video is to prepare for the unexpected on the other side, and the unexpected can come in the form of a market going up, a market going down, and of course a market going sideways. And then these all need to be prepared for on different time frames as well. The short term, the medium term, the long term, however that fits into your own plans. So without further ado, smash up that like button, subscribe to the channel, bell notification icon. I hope you're having a fantastic day wherever you are around this beautiful planet of ours. And just as we dive into the video, quick shout out for one of our channel sponsors, which is TradingView. This is something that I use in every single video. I use it all the time. And if you are looking to get yourself a premium access to TradingView to have multiple alerts and use different things like different indicators that you also see here on the channel, TradingView is doing 60% off, 1 month free extra. Use the links in the top of the video description, and you should even get an extra little bonus there for using the link on my videos here as well. All right, so with the Black Friday shills out of the way, let's move on with the analysis. And what we're covering is S&P, the Dixie, Bitcoin, Ethereum, and total market caps for a realistic downside projection, along with some of the maths here as well. So this will be a relatively compact video. So I hope you've got your coffee at hand. We've got a lot of numbers to get through and resistance, support levels, and theories involved. So in terms of the macro, nothing has changed here. Just to make that absolutely 100% clear, the macro here, we're still looking at this as being the significant, if not the cycle bottom for the S&P, along with the Dixie. We think the top is in here now and looking to further downside. More confirmation of this particular top at around 115 would be underneath the 104 level. You can see I've got my alert set here, and closes below this level are really going to give a lot more strength to the downside for the dollar, which potentially will at least hold up cryptos and allow them to accumulate at particular levels, potentially even go on some pumps. Why that is important now is maybe we're seeing a reversal here on the US dollar along with the S&P. So a short term, as I said, the macro, I'm still looking at this being the potential bottom here, but yes, we have come into some resistance here on the S&P. Of course, I'll get to the USD as well. But in terms of the S&P, this was the channel that we were looking at. Look, we can draw this any which way and connect some of these other lows. This might be another support level here as we connect the lows from early November to the current market action. But just going back to where we had it, it looks like we're about to break through that. And you can see more of the supply coming into the market here with the volume increasing as the market breaks down. So S&P 500. Let's not get those confused with Bitcoin, because we want to see what's going on here in the overall market to see whether investors are feeling happy, they're feeling like they want to go into risk on or stay risk off. And of course, well, at least my view is if we're starting to see some downside to the S&P, they're probably going to be risk off, which may at least, at best case for Bitcoin, go sideways on a riskier asset or drop to slightly lower prices. Let's get to that in just a moment. But for now, in the short term, we have a few critical levels here. 3,900 points, that's been a key level on the way up again. We broke through it on some good volume here on the 10th of November. And for the downside, we're coming up to testing that level now around that 3,900 points. If that breaks down, it's not the worst case. The testing levels that I would love to see the market hold to remain at least medium-term bullish, because of course the short term would then turn down if we break down past 3,900, is 37 to about this level here at 36. So the mid 3650 to 3750. You can see why, as this has been a key level throughout September, October, and then the 3750, 3760 level is the halfway point between the current cycle low and what may be the current top at this point that came out on the 25th of November, which is now 4,033. So short term, we may be seeing a bit of a correction here. You can see the supply coming in for the S&P. That would then potentially mean that we'll see a little bit of upside here to the US dollar. It's not exactly correlated, but what I'm seeing in terms of the patterns on the US dollar here is we've been down for 9 weeks. This is now on a weekly chart, so not a daily like we were just looking at here for the S&P, but down for 9 weeks. And the US dollar tends to have these sort of 9-ish week moves, approximately 2 months that we've seen in the past. So you can see some rallies against the trend. So in this case, the trend is down. Remember, this is a bit more macro here. March 2020 to a low in January 21. So at 10 months, you can see the market ran down. And then this little area here was 9 bars, being 9 weeks up. And so what we're trying to look for here is approximately the vibration of the market. How often does the market move in what sort of time frames? It's not going to always be exactly 9, but you're going to get reasonably close. Sometimes 7. We move it out to another significant area here, about 17 bars, being 17 weeks. 9 twos are 18. So you've got an approximate move there before you had a reversal in the trend. And let's take it all the way back to the low. You got 90 bars, 90 weeks. So it was 10 times what we're currently seeing right now. So 9 weeks down, maybe we see a bit of a reversal here. So strength back to the US dollar. And of course, what we have seen is when there's some strength in the US dollar, we start to see a little bit of weakness across other assets, including commodities. And if you want to throw Bitcoin in there, which is trying to get to being that commodity, maybe we'll see a little bit of weakness there, or best case, Bitcoin holds the level. So before we move on, for the USD, maybe if we are to get a reaction here, so basically a counter trend move, the trend is now down, and if we see a move against the trend going up, you can see the first levels here are about 107.5 being the previous top and then previous resistance levels, and then a little further up at around that 110. So anything underneath that level is still just a counter trend move, and potentially we'll see some lower prices. Overall, for more weakness on the US dollar, for more confirmation of that weakness, closes below 104.5. That is going to be some really, really key levels here. So keep an eye out on that for the US dollar, and that will then help the other analysis across cryptos and, of course, the major indice here being the S&P. Now for Bitcoin and cryptocurrencies, quick reminder before we head into that, Bybit, BitGet got massive sign-up bonuses going on. It's the bear market specials, 30K over on Bybit, nearly 9K over on BitGet. Yes, you'll have to go and deposit money on the exchanges and do some trading to get nearly $39,000. But if you're not interested in it and you don't want to do it, by all means, don't click those links. At the end of the day, we're trading crypto, we're investing long-term, we need some place to buy and sell our cryptos. These are 2 particular exchanges which so far have been doing a reasonably good job compared to what we've seen out in the market. No one can disagree with that right now. But of course, do not leave on a crypto or other assets on those exchanges more than you're willing to lose. And if you want to store them somewhere else, go and check out Ledger. They may still be having some Black Friday specials on, depending on when you see this particular video. All right, so over to Bitcoin cryptocurrencies. The current low here at the current price at 16,500, with the low being 15,500, sets us up for a potential lower swing top. So just looking at a realistic price range, while we remain underneath this low, or the previous low of 17,500. Should this market find some support here and start to rally up, it really does need to close above the previous low. Otherwise, this rally that's on will just be another bear market rally before another dump. Now, I hear the clicks already from the keyboard warriors. Chill out just for a second. Remember, we don't know exactly what is going to happen. Yes, call it everyone is guessing at the other end, but if you understand trading and investing, the game is about your probabilities of what you believe is going to happen based on your analysis, and then managing your money, so your money management, and then managing your risk. This is all the unsexy stuff. This is not the 100x BS that goes on in bull markets, because now you can see all that 100x BS stuff that goes on is really there to take other people's money and give it to the founders of any of these shit coins that come out and other people who just keep touting buy. We need to assess our risk and our money management. And that's what we're looking at here to the downside based on history, what we've seen in the past. And so this has been a significant chart that we've looked at here on the channel. Anything from between that sort of 19.5 down to about $11,500 as being a historical Bitcoin buy zone, like we've seen in previous bear markets. And this particular zone can be approximately 40%, like we've seen in the past here. Bitcoin went from that 5K down to about 3K. So it's about a 40% spread there. And what we're currently in is approximately, well, the top to the bottom is about that 40% spread. We go to the bottom there and come down to this bottom. You can see we've got about a 40% spread if we take it right up to that 19.5. So it's well within that area. And if you can manage your risk and your money within this area, which means maybe buy less at the upper end of this buy zone and buy more at the bottom end, not knowing if it's going to get to 11K, then you can manage your finances a lot better and have the probabilities on your side moving forward. So with that in mind, let's take a look at the downside and where we currently sit for Bitcoin and look at some numbers as well. From the lows that we saw, the first lows into this zone at about that 17.5 or 17.6 to the current price, we're about 9, call it about 10% down from that price there. So overall, it's not that big of a move in terms of the actual percentage and dollars in that sense. But in terms of the fear, people have gone absolutely ballistic over this particular move. So try and stay away from the emotions of these moves, and that can then lead to some more clarity so that you can formulate your plan and action it into the next stage of the bull markets. Now to the realistic downside. We're currently at 16.5K. Looking at around that 14K. So I've got my 50% tools on the chart here. If you want to learn more about these levels and how I've come up with them, check out the Gann swing indicator, and in the top of the video description here, go to the free TIA Alpha report. That's our newsletter that comes out once every 2 weeks, and we talk a lot about these 50% levels and how to use them to project profit targets and also resistance and support levels. So in terms of the short term right now, Bitcoin is trying to build up to test higher prices. We've gone through these targets, these multi-step moves to the upside to gain some bullishness back. Should we remain underneath this target level, still very, very weak, because that would then put in a lower swing top and potentially downside. I'm looking at around that 14K. But if we're able to break above this level and start to accumulate on multi-day closes above the 17.5, that's looking good, and we'll probably avoid any sort of further major dumps. That's all probabilities, of course. So to the upside, anything above that 17.5, more likely around the 18.5 is going to be much, much better for Bitcoin and potentially some cryptocurrencies as well. But for now, Bitcoin's still under these levels. It really needs to move up. Now, I've chosen these levels to the downside around that 14K. It's a big number that keeps coming up. It's a 50% level of mine here. And so I'm going to use this moving forward for some of the projections. Ethereum also to the downside, looking at some of the previous significant support levels that the market put in. So about 20% down to that previous higher swing low at about $1,000. Should it go further, we'll have to reassess those numbers, to the 600s, which were previous resistance levels before the market broke out. But for now, we do have a fair bit of volume coming in on some of these major weekly moves to the downside. You can see it's very, very high volume back in November when we had that first move down. And so far, we're really trying to hold that $1,100 and climb back above 1,300. So moves above 1,300 and the bear market downtrend, which is this diagonal, is going to set Ethereum up for a much stronger outlook and less likelihood. So the probabilities drop for bigger downsides. It could still move down, but if we close above key resistance levels, one being 1,300 and the other being the bear market downtrend, which is currently at approximately 1,300, then the probabilities of greater drops reduces. And so maybe you'll see more shallow drops, which then means you can formulate your plans to set up your buy orders to be a little bit heavier at the middle or upper end of the buy zones. All right, so that's how it is used. All right, moving on to the total cryptocurrency market cap as well. We've looked at final capitulation zones, worst case capitulation zones. If wicks are here, it's okay, but you don't really want to see the market closing below these levels because that would mean much greater weakness as well. So at the moment we've touched into this final capitulation zone, 20% from the current price would set us up at about $650 billion. This is for all of the cryptos, total cryptocurrency market cap, including Bitcoin, ETH, stablecoins, and of course, altcoins as well. And finally, the total cryptocurrency market cap, excluding Bitcoin and ETH and stablecoins is this purple line here. So it's a particular indicator that we've come up with at TIA. You can potentially search for that as well and have a look at what the market cap price would be without all of these other cryptos, stablecoins, ETH, Bitcoin, of course, and just include the altcoins, which at the moment is at about $187 billion. So if we're looking for a final capitulation of the altcoins minus the rest of them, maybe we're looking in somewhere in the vicinity of approximately 40%, 30 to 40%. That would then set us up with some other previous support levels from the market as it moved up, basically being previous resistance levels, which is how I've come up with that particular number there, around that 30 to 40%. So with that in mind, let's have a look at some of the numbers. What if 14K is the bottom? Okay, this gives us a bit of a downside target to some of these market caps so that we can have an idea of when this happens. Maybe this is around some of those final lows. What that would mean to Bitcoin, which we saw approximately 15% off, would get us to that around that 14K level, that 270. Is it realistic for Bitcoin to drop that much? Some would say a lot more, some would say no. ETH, 20% off the 150 billion, being at its $1,200 valuation right now. So just to clarify these, you can see ETH is at around 150 billion, and the rest of the altcoins here, along with stablecoins being at around 140, 145 billion, depending on the day, of course. So I've got stables at around 145, take off approximately 10%, about 130, because of course there are going to be people cashing out and there'll be less money in cryptocurrency altogether. Current altcoins, as we saw, is about that 190 billion, take off about 30%. Something realistic here. Maybe it doesn't go all the way to 40%, but we just get that 30% drop. There's your 130 billion. So the current total market cap's approximately 800 billion, as we can see on total market cap here being 835. But if we go to the chart here, it's at 191, and then other readings will have it slightly different again. So approximately 800 billion minus all of these deductions would sit you somewhere around $600 to $650 billion for a realistic market cap, total market cap, including stablecoins, altcoins, Bitcoin, and Ethereum. So if we keep track of our total cryptocurrency market cap and we watch for about a 20% drop to that level, then we can use this particular analysis to go back and check some of our cryptos to see whether they are forming bases at key support levels. If they are, it might be a good sign that we have seen the low for Bitcoin and some other cryptocurrencies. If they're not near some support levels, they might need some further downside, which isn't going to affect these charts too much because, as you can see from the total market caps, the majority of it is made up within the first top 10, maybe 20 cryptos, and then the rest of it are quite insignificant to the overall market cap. Let's piece this all together to something more actionable, because I hate just listening to videos on YouTube and not having anything to take into action, because that means I've just wasted my entire time. If it's just news and hot air, call it what you wish, there's nothing I can actually do with that. So let's turn this into something more actionable. Before we do, smash up the like, subscribe, bell notification, the monkey stuff that YouTube makes us do to push the content out to more people. So hopefully they don't get wrecked listening to ridiculous news in the upcoming bull markets and listening to all the fear that's out there right now about FTX and the rest of it. All right, so the actionable stuff here, what I'm watching for is the S&P. Maybe we get some downside here because we're seeing a bit of a rejection and supply coming into the market. The Dixie, maybe we're looking at a bit of a bottom, short-term, medium-term bottom form here before we go on a little bit of a run. Of course, this will be invalidated if the Dixie breaks down past this 105, 104 level and closes underneath those levels. Then we would say it's back on. The dollar is going to keep dropping, and maybe that would allow the risk-on assets to have a bit of a run, in which case we move over to Bitcoin and ETH. So should these two things be playing out, then maybe that gives us that opportunity for Bitcoin to test some lower prices, or at least hold out at these particular lows, because we did see a lot of volume come into the market on the Wednesday, the 9th of November, some of the highest volume in Bitcoin's history. And we've started to see a lot of volume come in at each of the lows. Each time Bitcoin has tested some low levels, you can see the volume has been much greater than any other times in this particular market. You can see the low here on the 21st, very high, and just yesterday as well, much higher than the previous 4 days as well. So the invalidation here is if Bitcoin closes above these levels, probably not going to see 14 anytime soon. Above 18, that's going to be even better again. But if we get rejected at these levels now at around that 17-ish, 17 and a half, maybe a little wick above and closes back under the 17 and a half, probably going to see that little dump to the downside, which is going to scare a lot of people. But in terms of the percentage and a dollar move, it's nowhere near as big as what we have seen through the entire bear market as well. So that's how I'm setting up for the next parts of cryptocurrency. Should we see upsides and what happens in those upsides, key levels that the market is going to tell me, look, the probabilities have changed to the downside and they're more in favor to the upside, or vice versa. Of course, guys, subscribe and like the video so you can stay up to date with how I'm following the markets. If you want to learn more, of course, go and check out the free Alpha Report over here. Subscribe to that. Black Friday specials are basically done by this stage, but stay tuned to that Alpha Report. Maybe we've got some more things coming up in the near future. Thanks once again for your time. I'll see you at the next video. Until then, peace out.